All right, welcome back to another episode of the Investing with TJ show. Now, today is a big one because we got the November jobs report and it was pretty eye-opening. Now, there are a few things that we need to talk about. We're going to need to get into some economics because in order to understand what some of the small details are alluding to, you kind of have to understand or have some kind of foundational knowledge. So the first thing that we're going to talk about is what the labor force actually is. So when you think about the unemployment rate, the top numerator is essentially those who are unemployed, and at the bottom is the labor force. And as the labor force grows, it actually drops the unemployment rate. Or what also drops the unemployment rate is if those who are unemployed continues to or actually decreases. So the unemployment rate could play on either end, on the numerator or on the denominator. Now, we need to start talking about what the major force was behind the disappointment in the November jobs report. Because here's the thing, Wall Street was expecting us to get 573,000 573,000 jobs in November, following 546 in the previous month. We got 210,000. That is a huge miss. But here's the thing. People are saying, well, despite the big hiring miss, the unemployment rate fell to 4.2%. A 0.4 percentage point decline that came even with rising labor force participation. Now, what exactly is labor force participation? Well, it's not just people who have a job. It also includes people who are looking for a job but currently don't have one. They're actively seeking employment, but they currently do not have it. That is key as to why we saw the unemployment rate, which I'll pull up Fred here, drop to 4.2. And let me move it over here so you can see the current numbers. We're at 4.2. And this is actually below where we kind of should be. So Q4 of 2021, it's estimated with a non-cyclical rate of unemployment that we should be right around 4.45. We're below that. We're at 4.2, which by someone just looking at the raw numbers, they're saying, hey, we're doing really good with the unemployment rate. Well, what's happening is that we're seeing more and more people enter the labor force, but it seems like we aren't getting many people who are gaining employment. So what's dropping the unemployment rate is actually not people getting jobs. It's actually an increase in the denominator, which is the labor force participation. That's bad, especially for those who are hoping to get in. And I think this is actually why we're seeing this. I think people have been hearing that, hey, a lot of people have been quitting and they're trying to get, higher wages. So you're seeing more and more people getting into what's known as the factor market. What is the factor market? Well, I'm glad you asked. Here's a quick definition. The factor market is a term economists use for all of the resources that businesses use to purchase, rent, or hire what they need in order to produce goods and services. The interesting thing is that you and I are part of the factor market. That's right. We are the sellers and the businesses are the buyers. What are we selling? We are selling our labor. Check it out. Workers are participating in the factor market when they make their services available to businesses. An individual member of a household who is looking for a job is participating in the factor market. An employee's wages are a component of the factor market, but the money will be spent in the goods and services market. So we've got more and more people entering the factor market to sell. Well, you might say, well, why are more and more people entering this market? Well, they heard that they can get a good price on their labor. But here's the interesting thing about microeconomics. The more and more of a supply we have of labor, it'll start to bring down the price because, hey, businesses can say, well, we've got a whole slew of people applying for jobs now. we can be a little bit more discerning on who we want to hire. And potentially that might be the dynamic that are maybe beginning to see develop here in November. Are we potentially seeing businesses now saying, well, hey, hold on. I know people have been offering higher wages, but we're starting to see a huge influx of people who are putting in their applications. Do we really need to, raise the price here, raise wages since we have so many people entering the labor force now? I guarantee you, especially in these big, large companies, I guarantee you there's someone maybe in the accounting department or whoever, CFO, they're probably eyeing this and saying, tapping the CEO on the shoulder, like, hey, man, like maybe we shouldn't, raise these wages so aggressively right now. Looks like the labor force participation rate is increasing pretty dramatically. So let's see if that helps to drop some of these salaries down and we don't have to hire people at these aggressive rates. Let's just hold our chips a little bit. Maybe this is what we're seeing, and potentially this may have this may be one of the reasons why we're seeing this uproar today. Because if we take a look at some of the market responses, gold is up in response to this. It's at 17 in the 1780s. It was around the 1760s earlier today. Silver is up as well. Looks like it's definitely tapping into its precious metals, more of its precious metals behavior, whereas other commodities like U.S. oil, wood, copper, they're down. You also have crypto down as well. The dollar's up. And what is causing all this? Well, take a look here. The VIX is at 34 right now. VIX futures are at 23, mind you, but the VIX is at 34 right now. So there is a lot of volatility going on in the markets right now, especially after this disappointing jobs growth report. So let's get into some of this and see what this article has to say. The U.S. economy created far fewer jobs than expected in November, in a sign that hiring started to slow even ahead of the new vid threat, the Labor Department reported Friday. Non-farm payrolls increased by just 210,000 for the month, though the unemployment rate fell sharply to 4.2 from 4.6, even though the labor force participation rate increased for the month to 61.8%, its highest level since March 2020. The Dow Jones estimate was for 573,000 new jobs and a jobless level of 4.5% for an economy beset by a chronic labor shortage. A more encompassing measure of unemployment that includes discouraged workers and those holding part-time jobs for economic reasons dropped even more, tumbling to 7.8% from 8.3%. The household survey painted a brighter picture with an addition of 1.1 million jobs as the labor force increased by 594,000. This report is a tale of two surveys. The household survey shows accelerating employment gains, workers returning to the labor force, and low levels of involuntary part-time work. The payroll survey shows a significant deceleration in jobs growth, particularly in vid areas. The underlying momentum of the labor market is still strong, but this month shows more uncertainty than expected. So you have some of these other markets here that gained, or some of these businesses that gained: leisure and hospitality. Let's see what else. What we have here. Sectors showing the biggest gains in November include professional and business services, transportation and warehousing, and construction. Even with holiday shopping season approaching, retail saw a decline of 20,000, which is interesting. Worker wages climbed for the month, rising 0.26% in November and 4.8% from a year ago. Both numbers were slightly below estimates. So kind of, highlighting a bit of what I'm beginning to see or beginning to assume is that with the increase of the labor force, potentially we might be seeing wages begin to decline as there's a higher level of supply of labor now in the factor market. But guys, let me know what you think about this in the comment section below. Please hit that subscribe button. Please hit the like button if you're new. Thanks again. It's TJ.